Africa's trade finance gap is shrinking but remains very high at an estimated $82 billion, and that's in 2019. And with various geopolitical issues threatening trade across the globe, the African Continental Free Trade Area Agreement is seen as the continent's best defense against the impact of strategic trade routes affected by a global conflict. But rollout of the agreement is slow as lenders remain risk-averse on funding transformative projects. How do we navigate reducing the continent's trade finance gap? Ovizikhungo Sicwetscha, who is a Pan-African head of short-term finance at Absa CIB, joins us with some insights. Ovizikhungo, good afternoon to you. Thank you for your time.
Good afternoon, ma'am, and thank you for having me.
Fantastic. Let's talk about, this trade finance gap, helping us quantify exactly where we are at 2024.
Thanks, ma'am. So maybe just to bring context to it and just to also elaborate how big a problem we have here. If you look at the different continents and how the trading intra those continents is, Africa is the lowest by far. And so intra-trade within the African continent is quite a big problem. And given that we have now this trade area developed out of the intra-Africa trade, continental trade, you do have an opportunity to actually work on this and kind of develop it into a much wider trading area. Just to give you a view, by 2035, there's an expectation that revenue amongst that should be around $450 billion US. So it's quite big, and trying to fill that gap is going to be quite a big task for us. And I think the last I checked, it's around 250 that gap that we see today. So if you work backwards, I think 2 years ago it was around 120. The COVID and other issues that have happened have actually created a big gap there as well. And I suppose the other question you might ask is, why is that? And I think the answer is really on the economies that you find in the African continent, being a developing continent. I think it does land us in this situation.
I'm asking then to just look at, the trade environment as a whole. Of course, you've highlighted the fact that the trade is rather minimal, but I'm also keen to find out about what it might mean for the reality of trade as it is dollar denominated, Ovizikhungo. And I raise this issue because of what we are seeing in Nigeria, what we are seeing in Egypt with currency weakness there. That is also further exacerbating issues with trade. How do we work around structural issues like this?
So maybe it might be important to just touch on the key trade dynamics that we see. I think we've touched on the issue of the intra-Africa trade, right, being quite a big problem. There is a commodity dependency issue that we see across sub-Saharan Africa. There is also the issue of infrastructure challenges that you have in the continent. To facilitate trade between countries, you have to have infrastructure that is ready for that, be it transport, technology, or even payments infrastructure. So there is a lot that needs to happen there. And also, I think what you see in the continent is that our economies aren't as diversified as they can be. And I think all of these things are creating the dependency you're speaking about. You mentioned currency issues. So what you find happening is that because we have to get whatever we get out of the commodities that we have, and we have to export these to countries outside of the continent, it creates that dependency. Now, what you might find is that a small shift in the geopolitical dynamics create a big problem for us. A big part of it is that issue of commodities and the price that all of these are priced on hard currency. And when this becomes a problem for us to actually manage our economies. And I think a big chunk of it is what you see happening in Nigeria. You had a similar situation coming out of the East African markets. But also, I think the other problem that you've seen over the years is the issue of sovereign debt in some of the markets in Africa, which is creating that problem as well. Because if your sovereigns aren't able to maintain their finances, it becomes quite a big problem. And the issues around currency and the drying up of those pools is a problem. Commodity prices have shot up. That's a problem for us because then it means that we don't have enough currency, and that's a problem. I think that what you see happening in Nigeria, in Kenya, is out of those kind of situations that we're finding ourselves in.
Let's talk about partnerships as well as ESG and using these as catalysts in addressing our trade finance gap challenges.
Yeah, so let's contextualize it a little bit, right? So ESG has a big role to play in boosting intra-Africa trade, right? And I suppose being in the African markets, the question we always ask is, what does ESG mean for Africa? And where do we start, right? Now, you would understand ESG to be talking about environmental issues, social issues, sustainability issues, as well as governance issues. One would argue that the biggest chunk you find in Africa is the governance issue, where you want to make sure that there are policies and processes in place, the economies are governed correctly, there's transparency around that. So governance becomes quite a big issue. But let's bring it back to what is happening in the markets, right? What you see a lot happening in ESG. One is you find a lot of discussion around renewable energy, climate change, financing, and all of those things, right? Which is important. What you don't find a lot happening is the social aspect of it. And being a developing economy, largely in the global south, what you want to see is how do we help Africa develop economically so that they can compete at an equal footing with the global north, right? So that becomes quite important. Now, let's bring it back to what are the issues that we see contributing to that. One, access to capital, big problem for Africa, right? Because one, the internal or the African banks and financial institutions sometimes do not have the muscle needed, right, to kind of get to the nitty-gritties of funding some of the big projects that we need. I mentioned earlier that infrastructure is a big issue. Now, without partnerships, you can't do that. So you need the DFIs, or what we call multilateral organizations, to kind of come in and help Africa. And we've seen a lot of that happening in the markets, trying to kind of help us. The second piece that we can look at is around the sustainability of supply chains, right? Now, a small tweak or a small change in the global systems is becoming a big problem for us in Africa. You had Russia, Ukraine, where there was an issue there. Supply chains were disrupted globally. Now, if the global economy sneezes, in Africa we catch cold, as they say. It was a big issue for us. So then our ESG agenda in Africa has to be centered around how do we sustain ourselves from making sure that our supply chains are anchored in Africa. And I think it speaks back to how do we contribute to the Africa intra-trade agreements and the inter-Africa trade area. And I think these elements, if you look at ESG and you bring it down to what is important for Africa, becomes quite an important element. Maybe the last point I must make here is that we and you would argue, and many people are arguing this point, is that we have lots and lots of renewable energy kind of naturally coming to us in Africa. How do we play in the forefront? I think one or two points I would raise there. I think as Absa, as an example, we're the biggest funders of renewable energy in Africa. And I think we believe strongly that that should happen. But what you should do also is to ensure that the technologies that are helping to get renewable energy going are accessible, are affordable, and the African economies can access them, So we need to have these partnerships that will help us access those from a funding perspective, making sure that those technologies are available in the African continent at an affordable rate that the Africans can actually afford. And I think those are key important areas around ESG. Technology is a big piece there. And if you have this technology, you can't use it, it's too expensive. We're operating in the third world economies. How do we access those? And I think it becomes quite important.
Well, unfortunately, Ovizikhungo, we're out of time, but fascinating conversation. Thank you so much for taking us through this one today. It's been an absolute pleasure. That was Ovizikhungo Sicwetsha. He is a Pan-African head of short-term finance at Absa CIB.